while worries over Russian invasion of Ukraine, which Western officials say has already begun, drag stocks lower in the short term. Markets face a bigger problem on the horizon, with the Federal Reserve aggressively tightening monetary policy and raising interest rates in a bid to fight surging. He points out that in past instances, stocks could usually rely on easier fiscal and monetary support, but in the present environment no such aid will be forthcoming. With bond yields spiking this year amid concerns about the Federal Reserve's tightening monetary policy, markets were already under. The S&P 500 is down more than 10% this year, falling deeper into correction territory on Wednesday. The Dow Jones Industrial Average is down more than 8%, while the tech-heavy Nasdaq Composite has plunged 16%. Whether the Federal Reserve's planned rate hikes in 2022 are affected by the Russia-Ukraine situation, which has sent energy prices soaring. With the price of oil and gasoline rising in recent weeks, a further surge could severely dent U.S. consumer confidence and make inflation worse, economists warn. It's really about oil, says Mark Zandi, chief economist at Moody's Analytics. Oil is probably up $10 or $15 a barrel because of the conflict. That will probably add, if sustained, about 30 or 40 cents a gallon to unleaded, he describes. Such an increase would add as much as 0.5% to year-over-year consumer inflation, Zandi predicts, which really complicates the Fed's efforts to rein in inflation and get back to full employment. Other economists are warning about the impact of higher energy prices, which could create a polar vortex. Stocks plunge, oil prices surge after Putin orders troops into eastern Ukraine. Forbes recession risks are rising as Federal Reserve scrambles to fight inflation, experts say. Forbes stocks fall for second week in a row as Russia-Ukraine tensions weigh on markets. Forbes Dow falls 600 points as Ru.